So, SoFi is on another epic run sitting right around all-time highs. And guess what? You can still buy more SoFi stock and be in an incredible position despite that run to make a lot of money. But unfortunately, many will absolutely screw this up and will instead be left a bag holder instead of making a fortune with this stock like we have so far in SoFi's journey. So let's discuss exactly how to do that today and also how to avoid disaster as well, so that way you don't end up being a bag holder. Just make sure you like the video if you like getting the truth without the hype, because that is exactly what you're going to get today, guys. It's going to be a lot of fun, so buckle up. Now, I personally have bought SoFi almost 30 times this year, and we're up over 100% on those buys so far, which the earnings flash sale ends today, guys, today, where we identified that exact situation and pounced all over SoFi stock. And you would have seen all those buys in real time if you were a part of the group. So make sure you take advantage of the earnings flash sale that ends today. It's the pinned comment down there. We'll talk more about it at the end of this video, but we got to get into SoFi stock. So let's discuss the 3 reasons to buy SoFi now. And then we'll also talk about how to actually buy the stock later on as well, exactly the strategy to execute there. And we'll talk about some risk and some things you got to avoid as well. So the first reason, it is early in its growth journey. Now, one of the best parts about SoFi and kind of where it's at in this journey is it is still a young company. It is not like a lot of my favorite stocks, of course, you know, the Apples, the Googles, the Amazons that are still great companies, still have great growth going into the future, but they are obviously much further along in the growth stage, right? Them getting a 10x is going to be incredibly hard. We basically need like a 2022 situation where they just get beat down to stupid levels for us to see that sort of return on the stock. However, with SoFi, I'm not calling it a 10x from here, but it is effectively much easier for them to 10x because of where they are in their growth journey. Now, it may take 10 years, may take 20 years for them to do it, but the point being, it is absolutely, if they continue to grow the business and expand it out, it has the potential to do that, or at least a higher probability than a lot of those other stocks that I love, but I know they don't really have the highest chance of having that sort of move like SoFi does. Now, you guys know I don't like to speculate out that long, so I'm not calling a 10x from here or anything else of that nature. A million things can happen before we ever get there. And no, I don't care about any of the other trash that's out there right now all over social media about it doing it, you know, in the next year or two. Hey, great. I win as a shareholder if it does, but that's not really how I invest. That's just simply speculating. That is not how you make money as an investor. But identifying great companies that are early in their growth journey gives you the best probability to have that happen. So that right there is the first reason why buying SoFi now today is not necessarily the worst thing in the world you can do. Number 2, the best years are 2026 and 2027. Guys, this is coming straight from this management team. They are saying, and Noto said repeatedly, 2026 and 2027 are going to be the big years in the growth and the expansion of the business, the expansion of basically everything. That's coming. It's not here yet. So despite the fact we're seeing awesome, incredible earnings right now, they've already tipped their hand that, hey, you guys just wait. It's coming in the future. And unlike maybe Palantir, to where they could say the same exact thing, and hey, that's great, but you know, it's had an incredible off the charts type of run. Obviously, SoFi's had a great run, but not that level, not even close to that level of run, meaning that if we get this incredible, basically incredible, you know, quote unquote, best years according to management team in 2026 and then 2027, we have a lot of legs in the stock from this particular price. Now, again, they have not given us the formal guidance on that in terms of the EPS number to hit. So I can't tell you what the stock price will be. So they gave us the initial guidance, but they have not updated that guidance to include crypto and a lot of the other things that they've kind of built out over this year. So I suspect that number is going to change, which will give us a much better idea as to where the stock price could go then. But this management team said the best years are coming in the future. They are not this year. It's not 2025. So if you've been impressed with 2025, well, guess what? You're going to get even better fundamentals in 2026 and 2027. And number 3, an incredible management team. Guys, I don't know what else to say. I don't know what all that trash was at the beginning of the year or, you know, first quarter of the year where, you know, Noto's a terrible CEO and he doesn't talk to us as retail and doesn't know how to run the business and all this other trash that was out there like that. This is the management team that has executed on a high level, quarter in and quarter out for 4 straight years now, guys. That is incredible performance. Beat and raise virtually every single quarter. That is an incredible performance by a management team. Oh, we no longer can do student loans and we got to completely shift the business away from our bread and butter to something completely different? No problem. This management team executed it in an incredibly tough environment for any management team, much less having to completely shift a business like that, and they executed on it about as flawlessly as possible. I don't care if Noto never speaks a word to the retail crowd. I don't matter of fact, I would prefer him to talk to institutional investors so we can bring in large, big money. I don't care about him talking to me or talking to the retail crowd or anything. I don't know. That didn't even exist 5 years ago. Who freaking cares? Nobody does. I don't remember Tim Cook ever talking to me, but yet I sure as heck have enjoyed my 55,000% gain in Apple. I don't know. Great. I take that over them talking to me at any point in time ever. I don't care that the management team gives guidance that I don't agree with. They're the freaking management team. They have a better idea of these numbers than anybody else. So just simply because I think they should give us 2 more cents worth of EPS, therefore it would trigger some whatever garbage was being triggered out there, supposedly, out there in, social media land, they guided to exactly what they needed to guide, which was still a beat and a raise. And oh, by the way, even if they're throwing in those extra 2 cents, it was probably going down during that time frame anyways, just simply based upon where the trade was at the time for SoFi amongst the traders who still have a pretty good control on this stock, which is another reason why I want him talking to institutional investors so they can take those shares out of the hands of the traders and over here to the long-term buy and hold type of institutions. This is why understanding this game on a high level, understanding what an actual management team does in order to get a stock price to move in the right direction, execute on a vision, and a lot of other things like that is so freaking important. Stay off social media, get into the earnings calls themselves, and watch great management teams execute. Study past great management teams, see what they said on earnings, see how they executed, see how they talked to investors out there, and you'll start to see certain patterns come up over and over and over again with the best management teams out there. And guess what? They're talking to me. It's not, they're going to give me what I want on earnings or anything else of that nature. So a great reason to buy SoFi stock is because of this incredible management team that I know is going to guide them through good times and bad times. And more importantly, they are much more worried about setting a massive solid foundation for the future, not giving us short-term gains right now for clicks and likes. And so that way we can feel really, really good right now just to watch our stock crater down into oblivion later on. They're not doing that with the business. They're setting up for an incredible long-term trajectory, not short-term garbage. That is exactly what I want as a long-term buy and hold investor. But guys, there are 3 reasons not to buy SoFi as well. And you've got to see if you fit into one of these 3 or not, because if you do, it is not the right time to buy at all. So the first one is you don't understand banking. There's this thing called circle of competence, and you have to understand what you know and what you don't know. Banking is very, very different. Fintech is very, very different than most other industries out there. A lot of them are very, very easy to get. We can all get the economics and the business model of Apple. Everybody gets it with Microsoft. You can get it in certain industries, but a lot of folks do not understand banking. That's why they fall for all the social media garbage whenever people get negative on SoFi, because they don't understand banking. I remember when rates were going up and everybody's like, oh my gosh, the banks are going to get killed. And I'm just laughing. No, they're not. They're going to have a massive margin to play with, and therefore they're going to be able to actually improve the bottom line significantly. And guess exactly what happened. Now, yes, the traders all dumped everything like they did everything else in 2022. But what did you see? Record profits, record earnings, records across the board in banking, despite the fact rates were at the fastest rate hike ever in the history of the Fed and everything else. What did you see? What did we talk about right here on this channel? This is great for banking. Guess what I got? I got JP Morgan down in the low hundreds. We got Goldman Sachs down around $200 or so. Look at where those stocks are today in relation to that. We're sitting on more than a double up, almost a triple up, and boring bank stocks, because everybody kind of tend to go along with the narrative because they did not understand banking on a high enough level. And you have to understand the industry in order to invest in it. I do not invest in NVIDIA, for example, personally, despite the fact it's been probably the biggest winner since the 2022 lows. And that's simply because I don't understand the chip cycles. I don't understand the business model. I can't spot opportunity from a problem within the business. So I choose to stay away because there are hundreds of great stocks out there and I can't own them all. So I choose to own stocks that I understand on an incredibly high level. And my competence that I happen to have happens to also include banking on a high level. So therefore, buying SoFi for me is easy to see. It is easy to read through those financials. It is easy to understand the maneuvering that they're doing that I see misinterpreted all the time out there. Not intentionally. I don't think a lot of folks are out there intentionally misleading you guys. It just simply comes from the fact they don't understand banking on a high enough level to understand how this stuff translates to the bottom line. Is this quote unquote dilution good or bad for the stock? If you don't understand banking, you're not going to see how awesome that deal was for SoFi stock and for SoFi investors. Instead, you're going to freak out and you're going to end up selling out of a great stock instead of buying more on that sort of weakness. So next up, you're swing trading it. All right. You guys know I occasionally do a swing trade. It's once in a blue moon. Not really my cup of tea though. However, having swing trade a lot in the past, if you were swing trading this stock, I don't understand what the heck you're doing. The right time to swing trade this stock was on the weakness back when it was down around 10 bucks. Now you're up over, more than 100% gain. Now it's just about how greedy are you getting before you execute your swing trade to get out of the trade. The worst time to swing trade, which also tends to be when retail wants to swing trade the most, is after the fact it's already hitting all-time highs and everybody wants to swing trade it. Now, it doesn't mean you can't still make money on that upside because there is momentum there, but the right time to execute that swing trade was the moment you started seeing momentum coming out of that, those lows down in the $9 range or so just a few months ago. So if you're looking to swing trade this stock, to me, in my opinion, there are a lot better stocks out there to execute a swing trade on with much less risk and much higher reward than you're going to get out of where SoFi is right now today. So if you're trying to swing trade it, and man, if I was trying to swing trade a stock and I wanted to execute a swing trade right now, I definitely would not be looking in SoFi's direction whatsoever. Not saying you can't make money on it, but again, there's much better risk reward profiles out there for a swing trade. And so for me, I don't have any interest at this stage in doing that. And number 3, you are FOMOing in. Well, this one should be obvious, but yet we repeatedly make this mistake of FOMOing into stocks. And the reason why FOMO is hitting a lot of folks out there right now is because they did not do the due diligence in the first place. They did not have a plan. They did not set price targets. I understand that we talk about it a lot here on this channel. I understand that I preach it all the time there. It is exactly what my entire Discord group is about, is creating that exact scenario to where you're not FOMOing in, but you're buying that fear, you're buying that panic because you understand what you own. Therefore, it makes whenever it was falling back just a few months ago so easy to pick up the stock. And now you're not having to FOMO in at all. You're getting to kick back and enjoy the ride. But if you're FOMOing into the stock, one, it tells me you don't understand what you're doing or you don't understand what you own deeply. Not that, hey, I've watched a few YouTube videos and kind of figured it out from there, but I mean, done the deep due diligence, listened to the past 8 to 10 earnings calls, gone through all the financials, every single release that they have, official release that they have for the past 2 years. All those sort of things like that. You've done creating a valuation, creating price targets, understanding where it's at in that particular cycle. All those sort of things prevent FOMO from happening. So if you're FOMOing into the stock and you're having that feeling, it tells me you might very well be making a big mistake because you're going to get shaken out if we get any sort of weakness. You're not going to know what to do if all of a sudden it falls back down to $15 or $10 or even, I mean, I would love it personally, but all the way down under $10. I would be so ecstatic. I would be so incredibly happy. I couldn't tell you, but if you FOMO in right now today, and then all of a sudden it takes a 30, 40% haircut here shortly in a couple of weeks, you are absolutely going to be doing the cardinal sin of investing that we do all the time, which is buy high and sell low. And unfortunately, if you're FOMOing in, you are setting yourself up for that exact situation to happen to you as well. All right, so that's the case for buying and not buying SoFi stock. But let's talk about real quick here just the 2 ways to buy SoFi stock, in my opinion. So the first one is a simple DCA. This is probably appropriate for the vast majority of investors out there until you become experienced enough, until you've learned how to do diligence on a high level, you understand valuations on a high level. You can get more alpha outside of a DCA, but it is really, really, really hard to beat. Absolutely a simple DCA beats trading. All the people out there trying to tell you, oh, take your profits, do this, do that. Total garbage. Statistically, the studies have been done over and over and over again. Sure, somebody down in the comment section is going to say that. I chuckle every single time I read it because I'm like, hey, I don't know. Go against the studies that were given by Wall Street, by the way, not us. Obviously, other folks have back tested these type things as well. Our very own Trips in our group has back tested it as well. Nothing beats a simple DCA outside of the second strategy here we'll talk about here in just a second. But trading in and out and, oh, I see that it's high and I'm just going to sell it right here. And I'm going to wait till it hits this Sigma Rizzler line down here and I'm going to buy it there. And, all this other trash like that. It doesn't beat the indexes. It doesn't beat dead people. And it definitely doesn't beat a simple DCA. And the best part about a DCA, in my opinion, is it eliminates emotions. You don't feel FOMO when you're doing a simple DCA because you're just simply buying it on your schedule and moving on. And on top of that, yes, you're buying those expensive shares, kind of like we're at right now, but let's say your DCA was $500 per batch, just as an example there. Right now, you're buying however many shares $500 buys at, $25, $26, $27 per share. So that right there is a specific share amount. However, whenever the stock dropped down to 9, for example, you're able to buy a lot more shares because that same $500 goes a lot further. So over time, you end up with more cheaper shares than expensive shares of the stock. And more importantly, you didn't have to guess a thing. You just simply went, money hit my account, I bought X number of shares, I bought $500 worth of SoFi, and I moved on with life. No crazy strategies, no crazy charts and graphs and all this other garbage that's out there, or not even having to do our second one, which is harder and does require more discipline and more skill. None of that sort of stuff. You're literally going to outperform everybody else out there preaching every other strategy that is out there by simply doing a simple DCA. So that right there is the first way. The second way that we're getting ready to discuss can absolutely beat a simple DCA and give you that alpha that you're looking for if you're looking to kind of be the top of the top of the top. It's not easier. However, it can be done. And number 2 is a modified DCA. So what this is essentially you are looking to do a DCA, except for instead of just DCAing all the time. $500 comes in, I buy it, set it, forget it, move on. I'm going to set price targets to where whenever the stock is overvalued, I'm going to back off and either lower my DCA amount or completely eliminate that amount and wait and pull up cash for whenever it pulls back and it goes down to that undervalued territory. And then at that stage, I'm going to start DCAing again. And as it falls down lower, I'll DCA heavier and heavier and heavier as it falls. That's exactly the strategy that I use personally. In 2021, guess what I wasn't doing a whole lot of? I bought some Apple, I bought some other pretty boring stocks, but I wasn't buying a whole lot of stocks back then because stocks were riding really, really high, red hot. I wanted to buy Palantir back whenever it DPO, but guess what? It went way up to overvalued territory. I wanted nothing to do with it at $40 back then. Well, guess what? Just a year plus later, it was all the way down in the 6s. Guess what I did? Bought a lot with all that cash that I pulled up in 2021 in order to buy that dip as it went down, went down, went down. Did I time anything? No, absolutely not. That's the beauty of it. It still gives me the ability to eliminate emotions and not have to time anything. And I just simply execute on that for however long it went. I mean, we got like a year and a half, 2 years to buy Palantir at significantly undervalued territory, which meant my modified DCA was kind of like on max on a whole lot of stocks during that time. I was pulling money from other investments, other places, other businesses to come in and buy stocks at that particular stage because the deals were so great and I needed to just continue to fund my modified DCA. And of course, as the stocks ran back up again, guess what? I already had, full positions plus bonus shares, plus bonus shares, plus bonus shares. So I was able just effectively ride my modified DCA up until it got to overvalued territory. And then I backed off and it just seems like, hey, every once in a while we get situations like we got earlier this year with SoFi. Guess what? Right back onto the modified DCA again, making those buys like clockwork. Lower you want to give it to me, the more I'm going to buy of it. Rinse and repeat on that strategy over and over and over again. So it is a way to beat a simple DCA. The statistics are there. The studies are there showing that, but it is more complicated because you have to understand what you own. You have to be able to set price targets, do evaluation and all that sort of stuff, because that price target right there, man, if you get that wrong, right, you may end up not owning any shares of a stock because you got too greedy. Maybe you just miscalculated the valuation. Maybe you don't understand valuation on a high enough level in order to set the proper price target for that. So it is more complex, but it is absolutely a way to beat that DCA, which is exactly what we teach in my group, which the sale ends today for the group, where we walk through exactly how to do all that through 5 free courses. We got free coaching in there to help you out. I do live Q&As at least weekly where we can talk about it. You can jump into my DMs, of course, post in the group there. Everybody jumps in and helps everybody else on understanding these things on a high level. I put out 3, 4, 5 videos a week in the group just exclusively for you guys there. We got stock analyzer tool. Guys, there's so much involved in the membership. Check it out. It's the pinned comment down there. Take advantage because the sale ends today for my group. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.